Hi everyone, this is Kelly Stone with Rising Point Solutions. I have Cody Velkovich with me from American Pacific Mortgage, and he's going to go over just some information with you about the market in this volatile time. So Cody, what have you been seeing with everything with the interest rates and people buying? Is this a hot time? Is it a slower time?
I think it's a confusing time for a lot of people right now, whether you're a home buyer getting ready to purchase here in the spring market, or if you're somebody who's been following the headlines out of the national headlines as far as where interest rates are. I think that right now people are confused, and hopefully something like this can provide some sort of clarity as far as what's going on.
Well, that's good. I know that there's a lot of confusion because there's a lot of people that are either being laid off or there's a lot of people that are being required to work. And schools are out. People are trying to scramble for childcare. I know Texas hasn't been hit yet with the whole quarantine. I'm up in Chicago, and we've been on lockdown since Saturday evening. Typically, you would go out and you would drop kids off at babysitters, but unless you are deemed essential to the economy, we're seeing a lot of people that are stuck at home, obviously with kids. So what are you seeing?
Well, similar things. Obviously, Texas has not issued a stay-in-place order like California, New York, I know Illinois over the weekend. We actually, the Governor Greg Abbott had a press conference yesterday. He said where essentially there are a lot of states or a lot of counties in the state of Texas right now that don't have any confirmed cases of COVID-19, which is his rationale for not doing a statewide stay-at-home order. Obviously, the different cities in the state, I believe news came out that Dallas County is expected to do a stay-in-place order here shortly. Whether Harris County in Houston or Travis County here in Austin follow suit is anybody's guess. But right now, I think that the best thing that we can do is obviously continue working. There's just a lot of volatility, confusion right now in obviously any industry that you're in here in the U.S., but the mortgage space especially, there's a lot of volatility when it comes to interest rates and what banks are doing. Yeah, I mean, right now, everything is kind of up in the air as far as everybody figuring out what the next step is.
So are you seeing a drop-off in applications, or is it just real steady running?
Well, so I think that, so just for a little context, so 3 weeks ago today, we hit the lowest interest rates that have ever been seen in this country. Yeah. And once the news of that got out and people started following what the markets were doing, there was a insane barrage of new applications coming in. I believe that the week over week for refinance applications that week had gone up 75% from the week prior. Wow. And so here's basically what you had. You had borrowers coming in droves to refinance their current mortgages. The 10-year treasury yield, which is what has traditionally been the main indicator as far as fixed rate mortgages go, the level of stability was basically at 1.3 basis points across the board. That was kind of looked at as the floor for where the 10-year would go. And within the week that followed after it hit that point, we were looking at like 0.3, 0.4% on the 10-year yield. So the rate dropped like a rock. And people were getting in. I was quoting 30-year fixed mortgages in the twos. And so for a short window there, probably about 5 to 6 business days, there was a really excellent opportunity for anybody, pretty much, if you owned a home loan. Even people that were buying a year ago would benefit from getting rates that low as far as refinancing. And so here's what you saw. You saw a massive amount of people submit applications, begin the refinance process, and banks, mortgage companies, whether it's the big banks or the correspondent lenders like myself, it gummed up the system. And essentially, the demand for those type of mortgages and those low rates exceeded basically the capacity of a lot of banks to be able to handle that. So fast forward from that Monday 3 weeks ago to the Tuesday the following week, so 6 business days later, and you saw markets reprice in a big way. We saw interest rates in a single day go up a full percentage point across the board: government loans, conventional loans, purchase and refinance, and that was industry wide. And then pretty much since then, if you were to try to do a chart on mortgage rates over the past 2 weeks, it's basically been a roller coaster, kind of like the way that the Dow Jones Industrial Average was dropping 2,200 points in a day and then shooting up 1,800 points the next day. Mortgage rates have kind of been the same. And so things in the mortgage space as a whole have been just absolutely insane. What we're encouraging people to do right now is that if you are somebody who, let's say you've got an interest rate above 4%, or you have seen the value of your home go up to where maybe you can refinance out of having a mortgage insurance premium, or if you're looking to tap into cash because your property value has accelerated and you have equity. Right now, what we're telling people to do is go ahead and get those applications in. Yeah. And then what we're doing is we're just keeping an eye essentially on what the markets are doing, to where when they're ready to go, they can pull that trigger and lock themselves in an excellent interest rate.
Do you think that the interest rate is going to go down to where you saw it 3 weeks ago? Do you think that'll hit that again, or maybe even close?
So right now, market conditions being what they are, as far as like the 10-year yield and what the stock market's doing, obviously there's been a lot of news about the Federal Reserve and what they're doing right now. They are basically buying up billions and billions of what are called mortgage-backed securities. Now, this is a process that happened back in 08, 09, 2010, and basically through the entire Great Recession, what's called quantitative easing. So essentially, the government is pumping money into the financial markets to try to help keep them afloat. And ideally, this should help bring rates back to where the market shows that they should be. But then what's happening right now is you're butting up against that other problem that I talked about with lender capacity. So right now, lenders are still working through those refinances that they got 3 weeks ago. Average turn time on a refinance is typically between 4 to 6 weeks. So the general notion is that once this initial wave of refinances funds out and clears out of the system, that hopefully rates as a whole will come back more in line with where the markets are. Now, obviously, with where everything's at right now with the COVID-19 situation and the stock market basically in the bear territory, we're talking, the Dow Jones has lost 7,000 points in the last couple of weeks, which is essentially 20% of its value. Mm-hmm. There's a lot of uncertainty. So general wisdom is that you'll probably see things start to get back down into, just for comparison's sake, for a 30-year fixed mortgage, if you have a solid credit and at least 20% equity, you can probably start to see things get back into the low threes once this initial wave clears out. Now, whether we start to see things go below that again, no one really knows. But I think the best thing for people who have been sitting on the fence and are watching this video and want to know, hey, is a refinance good for me? Go ahead and get your application in with your mortgage lender. Just have them be the one that's watching the markets for you to see, hey, because right now when those opportunities come, it's a matter of pulling that trigger and locking those borrowers for 60 days to make sure that rate that's going to stick with them.
That's an excellent point. That's excellent. Yeah. So definitely get your applications in, get ready now, because you want to make sure that you're on the ball. You don't want to miss this if and when, I should say when, really, the interest rate goes down again, because we know that we're in volatile times and we want to take advantage of it and help our families as much as we can, right?
Absolutely, for sure.
Is there anything else that you could recommend?
Just keep an eye. You can follow us. I try to post updates to our Facebook page. I manage a Facebook page for my company, American Pacific Mortgage here in Austin. You can find that at facebook.com/Austin Mortgage Bank. But right now, they're between the medical situation that's going on and the financial markets, there's just a lot of confusion. I mean, there's been situations where, let's put it this way, we as mortgage lenders have quoted anywhere from probably a 3% rate to a 6% rate in the past 3 weeks based on the product. So things have been absolutely crazy, and day to day you're seeing different things. That last Friday was not a good day. Today has been a much better day for mortgage rates. So what I can recommend is people getting their applications in with their mortgage lender, and then just keeping an eye on what's going on nationally, because we're also seeing situations where title companies are having issues actually closing loans because of the fact that there may be in areas where there's a stay-in-place order or simply out of health and safety precautions. We're seeing a lot of situations where appraisers are refusing to go into homes.
Mm-hmm.
And so there's a lot of movement going on right now at the federal level with like Fannie Mae and Freddie Mac, whether they'll allow just exterior only appraisals for homes, whether they'll allow automated valuations for homes, just because this viral situation is so far reaching that, it's having an impact on everything. So.
All right. Well, thank you so much, Cody, for the information. I'm glad that we can share with everybody. Thank you for your time.
Thank you, Kelly, for inviting me. And if people just want to stay up to date on what's going on, like I said, they can follow our Facebook page, facebook.com/Austin Mortgage Bank.
Awesome. And then we'll add that in the tag when I share the video. So just make sure to put that link in. And please like and share the video so that we can educate more people on credit, mortgages, and making sure that you're getting the best deal possible.
Absolutely. Thank you, Kelly, for having me.
Thank you. Have a great day.